Alright, hello everyone and welcome back to the show again. So let's get started. As you can see, S&P 500 actually closed after the first flow. It actually closed a little bit lower, so below this resistance. So things are not looking good in terms of a very short time frame. But otherwise, this whole momentum of bullish momentum remains intact. So that's something to take note of. It does go to show that this is considered a resistance, as it's spending time actually once it breaks through, even though it closes nicely above, it actually didn't maintain on the following day. So this means that this particular zone is really considered, is really an active resistance zone. And one thing to note is that even though I draw resistance as a particular line, you must bear in mind that resistance in actuality refers to a zone. So that is something that a lot of people don't realize it. So it's not a specific science, but rather it's sort of like an art when it comes to drawing horizontal or even trend line resistances and support. So do take note that it's always about a zone. So for this case, you can see that this is a zone of resistance as time is spanning above around this region. Similarly, like this is a resistant region, so price tend to spend a few days on it. Likewise, here is also a resistant. Prices spend quite a long time around this region before it actually decides to go upwards and above. Whereas in between here, you see without any resistance, prices just move very cleanly across it. Yeah, so that's basically the rationale of drawing support and resistances. Okay, but if you're looking on the update wise, as you can see, market structure remains very clearly in the uptrend. So the trend remains normal actually, because these moving averages are not aligned nicely in terms of 50, 150, and 200. But otherwise, price is above the 200 simple moving average, and also is making higher highs and making higher lows. Okay, so if you have entered this trade, like what I mentioned, you should have taken some profit, 50% of profit here or some part of the profit here, and then for the remainder profit, I will still leave it open and wait for possible reach of target over at this second resistance end of the resistance region per se. Right, let's move over to the next one. So as you can see, Nasdaq is still looking very strong after breaking this, like what I mentioned yesterday. As you can see, historically, this is the all-time high of Nasdaq. So there is no clear resistance of where this thing can hit. And in fact, it actually break above this 10K. As I mentioned yesterday, even though 10K is a 5-digit number, it's a psychological barrier. This doesn't work well when it comes to indexes, simply because indexes by nature are a combination of a lot of underlying equities in it. So you can't just, so this value is actually derived from the underlying constituents and not by the single constituent, which acts as a greater psychological barrier per se. So, yep. So if you have entered a long trade ever since here, you should be sticking to it. So I'm still sticking to all my tech trades. Tech stocks in terms of long-term investment, it still remains valid. And yeah, so in terms of the market update wise, you can see market structure remains strongly bullish. Bullish and bullish. Because price is above these 200 simple moving average, it's still making higher highs and higher lows. All right, let's move on to the next one, which is gold. Okay, so for gold right now, it's very interesting because ever hitting this is support, support, and support. You realize that this is also a very range bound zone. So in fact, you want, okay, I would draw such line if you want. Okay, so yeah. Okay, so the reason why I'm drawing this trend line instead of support and horizontal resistance is because this is not very typical, but you can look at this zone region. Okay, so maybe I should use this, it may be clearer. This is like, say, yeah, so this I will consider the sell zone. So if you're trading this range, right, you can see 1, 2, this is 1, 2, 3. So you could have looked for a short. Say, I would say here is a consideration for sure if you're looking for a range bound trade. Likewise, when support was found here, you could enter a long and take profit around here just as well. But if you have yet to enter a short or a long trade, is here a possible valid setup? So I will look at the price action instead. Okay, but before I do update, before I do suggest whether it's a potential trade setup, let's update on what we should update on a daily basis. You can see this is a high, this is a lower high, and this is 1737, 737. Oh, this is actually 0.01 point lower. So yes, this is a high, this is a lower high, and this is also technically a lower high just by 0.01. So that's very important to take note of. So because of this, I would still say it's actually valid to go for a short trade setup. So okay, if you're looking at this as a zone of potential zone of value whereby you can look to short. However, for me to actually consider, I'll look at 4-hour chart. So what I would choose to do is, so you can see here, this is a high, this is a low, so this is a potential high. So what I'll do is I'll enter upon a break of this successful low. So you can have a stop loss over here, sell will be somewhere around here. So yeah, this will be a potential trade setup based on the daily time frame. When you wait for the minute that this thing breaks down, it also means that there's a change in market structure simply because you can see this trend line as well. So there's two ways you can look about it. Some people will be a little bit more conservative. They will set it lower with maybe a bit here lower. This is another alternative. So they'll use this high as a reference point for stop loss. Or it could be a little bit more aggressive. So you could go here and then enter just upon the break below. So when it comes to which method is actually better, I would say there isn't a clear-cut technique, but bear in mind that you have to remain consistent when you make multiple trades, because this is a very important thing if you want to be a discretionary type of trader. Yeah, so some people actually draw this trend line. So some people wait for it to break this trend line, and then they can really enter a short over here. So for me personally, myself, I'll actually wait for such a setup instead. Although you can also enter over here, but to me, since there's this trend line that's very close, it makes much more sense. I would typically enter on the more, what do you call that? The odds are more in my favor per se, because not only is there a break of market structure, there's also a break of trend line. So these two things happens, there's a greater likelihood of this trade playing out to reach this zone. Okay, so otherwise, let's stick to the this update wise. You can see that it is a high, a lower high, a low, a lower low. So I would say that technically it is still in a bearish or bearish market structure even on the daily, because you get lower highs and lower low. Whereas market trend remains bullish, and this remains strong because these moving averages align nicely 50, 150, 200. And yeah, there you go. All right, let's move on to the next one. So on this, okay, so now this trend of euro is still looking very strong. There isn't a valid trade setup. I'll wait for some sort of retracement or pullback, and then I'll enter the trade. Alternatively, if you remember what I mentioned yesterday, I did say that this pullback, if you would go on the aggressive end, you could be entry, say on the 4-hour time frame, whereby you see this particular support on this 20 simple move, exponential moving average, you have entered long upon the break above. So there's alternative if you want to trade on the lower time frame. But bear in mind that if you do trade on the lower time frame, you have to stick to it over consistent periods of your trading journey itself. You cannot be like switching time frame, because that's a mistake that I made myself along the way as well. Okay, so trend wise, here is still strong, align nicely, price is above, making higher highs and higher lows. So yeah, so this is a market definitely just to look for long setup, just across which time frame is more favorable. Okay, let's move over to the Bitcoin market. That's why I say Bitcoin is really moving in a very range-like pattern. On the daily chart, you can see high, a lower high. Right now, you actually from a higher high, you take here to here, is a higher low. So I'll say that the market structure actually has transited to a bullish market structure. So this remains strong and this remains bullish. Strong because this is aligned nicely, 50, 150, 200. And it's also bullish in terms of trends because price is above this 200 simple moving average. So I actually entered a long setup, but actually not on Bitcoin, on the counterpart on Ethereum. So I'm still on the long setup. But if you have entered based on this, like what I drawn yesterday, this is still a valid setup. But I will go through as to why I didn't enter this particular setup after further analysis at the end of the video itself. So what happened is that because I saw that on the 4-hour chart, you see that there was many wicks here, 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 here itself. So it was a very risky move when there's this type of wicks pattern forming up. There's a lot of indecision in the market itself. So that was the reason why I decided to choose Ethereum, whereby the wicks are actually smaller, so it's has less chance of getting stopped out in an unnecessary manner per se. So this is one consideration that you can have when you're trading crypto, especially when crypto trends to trade in tend to be correlated in that sense. So when the Bitcoin moves up, it tends to move up other tokens as well, like for example Ethereum. The keyword here is tends to, and there's a high correlation, but that doesn't mean it always follow through just because Bitcoin moves up. In fact, there are times whereby Bitcoin moves up and the other moves down. So there's something to bear in mind as well. Okay, but if I entered this trade based on this long setup, like I said, above this break of 9850, then I will stick to it. The stop loss still remains valid and over here. And the target will still remain as T1 as over here as well. So in terms of that, let's enter the 4-hour. 4-hour chart wise, trend is still remains strong. These three align nicely. And in terms of the market structure wise, you can see this is a high, this is a higher high, this is a higher low. So yeah, it's technically bullish and bullish. So price is above this 200 simple moving average as well. So if I say if you've entered the long setup, it's definitely still looking bullish. There's no reason to close out this trade for now. So So the target I'll copy over here. So the target remains whereby you can see over here, remains at 10.3 to 10.4K, which is target 1. And the second one is right above here. So this is target 2. So yeah, so that's the setup. So for now, would I enter this setup if it does fall through here? My answer is no. So actually we'll delete this because this is no longer a valid setup to me. If it does break below here, what I would do is I'll wait for further confirmation because right now it's looking bullish in terms of market structure. So unless it accumulates somewhere around just above this, and then I'll put a sell stop order below to just trigger right the bottom if it does breaks below this horizontal resistance. And yeah, that's it for the day. And I'll see you guys tomorrow. Otherwise, thanks everyone. And thanks for watching. If you're interested, subscribe to the channel. Otherwise, take care. Bye-bye.